If we are so critical, we are going to fast forward our movement into AI. There's only so many hours in a day. And so I need to push that limit a little bit and get out of my comfort zone.
I love creating relationships with people, having meaningful relationships, enhancing their lives, them enhancing my life, and really serving a mission of serving others, right? And so there are a lot of
All right, welcome to the next episode of Keeping It Real with Ruhi and Reggie. We have a special guest today, and his name is Mickey Patterson. He's going to be bringing a wealth of knowledge to us today about what he does, and we want to showcase him and his business.
Thank you for joining us. And why don't you share a little bit about what you do, Mickey, and how you can help our audience?
Certainly. So I've started off, my wife and I, we work in the real estate business together. We kind of have a little bit of a divide and conquer effort within what we focus on. I focus on a syndication and fund management side of the business. This is something we started just a few years back. I came from a background of more technology sales and business development, and this was a way to really start looking at that audience to educate people on how they can get involved in real estate and how we can help them get involved, especially passively investing in projects and benefit from some of the real estate investments while not having to deal with the tenants and toilets and all the hassles that come with being a landlord. So that's really where that stemmed from. It actually started probably over a decade ago with my wife's brokerage. That's her business. She really focused on primarily is a real estate brokerage, property management, kind of a turnkey services for a lot of investors. And she has investors here. We're based in North Texas, but we have investors that are from all across the country, people who are looking at single families, some small multifamily, some things you might traditionally go through just a property manager or a local broker for. And then now we've expanded that to larger properties, whether it be RV parks, apartments, developments. And we look at just providing a really a turnkey service for people who are looking to be involved in real estate or just looking to educate themselves on where to get involved. So we kind of do a little bit of everything. We're asset agnostic, so we kind of like to dabble and tinker in a little bit of everything.
Okay, so are you like mostly managing properties, or are you just like collecting funds for, private equity, loans for people that are looking to invest as well? Or
so I'd say most of my focus with the Gorilla Capital Partners is this company, and where we focus on that is one is an operator for projects. We'll have whether it be RV parks or small apartments or land developments. In those cases, we'll work either independently as a general partner or bring in other people to projects, and then we look to bring in passive investors or even money from funds and other sources to run those projects. And then as well, we do set up funds where we might invest in other people's projects. So in those cases, it really is about bringing in passive investments from across a wide variety of industries, whether that be like my background in the sales environments or technology spaces or physicians, really looking to target that busy professional who wants to get into real estate, but just one doesn't have the time, the knowledge, they don't want to spend the time with it, but they want to do something with their money that's not the stock market and get some of the additional benefits that come with real estate, things like your tax incentives and all those other things. So that's kind of I'd say our core focus.
So let me
Fantastic.
ask you, Mickey, if you have someone or we have someone who wants to come in and invest some money and they don't want to come to Texas because they're very busy, but they've got 50 to 100,000 and they want you to invest, how can you help them?
So in a variety of ways. So usually those things just kind of start with what's their appetite for investment. Some people want to invest, but they're what they can get their arms around is something that's more specific to what they're used to, like a single family house or a duplex or those things. And that's part of our business where we've got, and you mentioned California, because I think that's where you guys are at. We've got numerous clients from California where they've never even seen the properties. They just, they call up Sherry in that case and say, look, I've got 50K. I want to buy a house. They can put some money down. And, I think I want to spend this much. Can you go find it? Oh, by the way, do a rehab budget on it. Tell me what the rehab's going going to be. And when you're done, manage the property. And then so they literally just say, here you go. They sign their contract, and then they collect monthly rents. And then even on those projects where there's a lot of rehab, they wouldn't even know the difference because they see some pictures and then a check each month. So there's opportunities for people to do that, or even ones that want to maybe learn a little bit. But we have most of our clients in those cases do that. And then the other side would be ones who really are looking for a completely hands-off, almost like you'd put in a 401k or IRA, where it's like, okay, here's 50K or 25, 50, 100, whatever that number is. And they just say, look, I want you to invest this. Send me the details. Maybe it's an apartment or RV park or some land development. I have an interest in knowing kind of what it is, or maybe it's just a fund that kind of goes to any of these type of projects. And we have those offerings as well, where we say, look, here's the type of stuff we're going to look at. Maybe it's short-term rentals or vacation properties or whatever it is. And then in their case, it's really just like investing in a mutual fund. They're just going to send their money there, park it. Most of the time, they'll kind of forget about it for a while. And then each month, each quarter, they get distributions. And then when the properties sell or they exit the deals, then they get a bigger chunk, kind of just like selling off stocks or something for that matter. So there's a lot of different options.
What's usually like the entry point in terms of how much someone would need to invest with you guys?
We do have projects, and I'm thinking on the purely passive deals, I would say that the lower entry is going to be around 25K for most of the projects. I would say that's the lower entry. The bulk of the projects are probably going to be in that 50K range. And you see some projects, whether it be us or other people, where that's even higher in the 100K type projects. But I would say the majority of the things that we'll look at are going to be in that 50K, though there are some projects that people can enter in around 25K investments.
And what are they looking at, Mickey? What's the ROI? Like, what can if I give you 50K and I say, I just want to see some money coming in, where do I get the money?
Certainly.
Show me the money.
No, exactly. So I'm going to give you a very generic answer that will be kind of a guide. And this is something that we follow along with a lot of people that may be investing in multifamily or these type of things. Is most people target with these type of investments, and this is kind of real estate across the board, is, can I double my money in 5 years? And this is kind of a magic sweet spot for most of the people to say, is this deal worth it? So if you're investing money with me, I'm not even going to offer you something that on paper can't show that it should double your money in 5 years. That's kind of your baseline. That's where things should be. Now, what does that equate to if you're thinking in stock terms? That's probably about a 16 to 16.5% return compounded every year for 5 years. Just to put that in perspective. And so those are, I would say that's kind of your sweet spot that most people like to be. There are some projects that are more aggressive, like in development projects. They're a little more risky as well, so they're more volatile. And then there's some that have a lower returns, but they're also going to be more risk averse. So if you're looking at things like hard money lending or things where you're just really supplying debt and it's always secured and you don't have any of those issues. So you'll have a range, but I think the real sweet spot that people are looking for is, how do I double my money in 5 years? And if I can do that, then I'm beating most of the stock markets. And, I've also got some other benefits, tax, the tax and depreciation benefits. So there's a lot of stuff that goes with real estate. That's a whole topic for numerous conversations on that stuff. But there's a lot of good reasons for people to be involved aside just from that return.
No, absolutely. And so can we expect something like quarterly? Like, would I get a payout quarterly and then something at the end of 5 years, or what? How is it structured?
Yeah. So that I would say the majority of the projects, especially let's say multifamily, because most people are thinking about apartments or mobile homes or RV parks or things that operate for a long period of time. Most of those people will structure in a quarterly payout. And then you'll see sometimes cash flow that may range from say 6 to 8%. That's what you're putting in each quarter or each month, or each year, but broken down into quarters. So that's probably a pretty normal structure. People just do quarterly distributions. And then really the significant part comes with when the property sells. And most projects that people look at are going to be in that 4 to 6 year window. So the good thing with all these investments is that you get an idea. So you get this kind of proposal of stuff. It's not you're going into something blind. It says, here's a project we're going into. We really want to exit in 5 years, but we might look at it before, a little bit later. But that way you're not putting your money into something that's getting sold 10 years down the road. So you want to have some assurances that, okay, there is a timeline on my project, and I want to be able to get that money back out because I may have other projects. Yeah. But then there are projects in a case like a developments, it might be 1 year. And in those cases, there's really no cash flow because you're just building something from scratch. And so you might be a 1 or 2 year project. It's a little more nerve wracking because you've got money that went out and you don't get anything during those periods. And then you get a chunk at the end. But usually what I would tell people in those cases from a comfort level is when you put money in the stock market, I would imagine most people are this way. Most people aren't getting a check mailed to them for dividends. dividends. There are some dividend stocks, certainly. But when you put that money in there, you're really thinking about, okay, at some point, I'm going to sell that stock and then I'm going to get the money with the growth. That's the way to think about a lot of those investments is you're not really relying on that cash flow. You're putting it in hoping for the growth of the deal and then those, especially with the development side.
Yeah.
What markets are you guys working in?
We're predominantly in North Texas, though we do look to partner with other people in other areas, like I say, Houston, San Antonio, Austin. We've talked to people on a couple of projects in Louisiana and even up north in Kansas or over in Tennessee. We haven't done any of those in those areas. Really, when we look at those deals, the key thing there is aligning good partnerships with the people who know that market well. So while we might know an asset class, for example, and our market here, we'd really want to rely on somebody who's got a really good grasp of that market that's local, combine that with maybe our expertise in an asset class, and then potentially somebody else's expertise of, if it was development in a certain area. So I think at those times, it's really about putting together a good team of people that are in that kind of sponsor group or a general partnership, and then having that available for people to look at. Because, we like Texas. It's obviously it's a growth market in numerous areas, but there's opportunities that pop up all over the place. And so being able to be nimble, not just in the market, but also in the asset class makes it a good option for people to always be able to move where the projects are, especially in this kind of competitive, chaotic market we're in right now.
Oh, absolutely. So one last question on that part for me is so if I'm investing, am I investing with like 5 other people on that project, or am I investing on my own, or how does that work? Tell me.
A good question. That's a common one that a lot of people have. So the answer is it depends. So if there's a project, say that we're raising, let's say $2 million for $2 million of cash, and we're taking a loan from the bank for the $2 or $3 million for the other part. Well, the answer is if you're bringing $2 million to it, well then you're investing alone. But you realistically say if you had this $2 million project, and we talked about earlier, maybe the lower parts of the investments are, typically around $50K. Theoretically, you can end up with a whole bunch of people there. We really don't want a case where you've got 40 or 50 limited partners there. No, these aren't decision makers. They're not all involved in day-to-day operations. It is passive investments that we're bringing in, but it still adds more management complexities to it and bringing in every single person. But I would say it depends on the size of the project. And then, but to answer your question more specifically, I would say that most of the ones that we've dealt with, 8 to 20 people. And that just kind of gives you kind of a realistic number for a lot of these projects. In that same scenario, if you had 20 people at $100K each, now you're sitting at $2 million in that scenario. So that would give you kind of a sense of how many people you'd have.
Awesome. Reggie, question. Sorry, I've been like dominating.
Oh, it's totally fine. It's totally fine. So right now in your business, are you guys like expanding right now?
We are. So ours, I would say expanding, yes. And then also looking at adjacencies where we can capitalize on more growth opportunities. For example, we've moved into a little bit or added a little bit more development opportunities more recently. The multifamily space, and I guess part of what drives that multifamily space right now is a bit of a challenge. You've certainly had this flattening when it comes to the rent growth that we've had for so long. I mean, for so long you could just say, I'm just going to buy this property and rent's going to go up 5 or 10% every year. I don't even have to think about it. I can just underwrite anything and it's all good. It's going to grow. Well, now we're seeing that it's not. We've had this kind of stabilization or plateau a bit for rent rates. And especially with the interest rates going up as well, when we look at these opportunities, a lot of the stuff that might have cash flowed a year and a half, 2, 3 years ago, just aren't, the numbers just aren't working out. The lenders aren't lending on it. The rates are high. They're much more reluctant to go into the deals. They're wanting a better debt coverage ratio. So the challenges are growing in that particular space. I'm just using multifamily. So part of that, becomes, well, what are some other areas you can go to? Maybe build to rent, where you actually can develop the property, or just even horizontal development, doing some entitlement work, or some slightly adjacent markets. So for example, we've got some recent projects. We had a few RV parks that we did. And these are cases where it's just shifting a little bit, not wholesale exiting one group, but being able to be nimble and shift from one asset class to another one, maybe shift markets a little bit as well to see where it's going. Like in a primary market like a Dallas-Fort Worth to a tertiary market around the edges. So I think the main thing is, like in our case, is looking at where those opportunities are coming up, not trying to force an opportunity into a particular area. Because if you buy the deal wrong, you really just can't make up the numbers as the project goes through.
Right. So for those that want to get involved with you, are you looking mainly for people that are in the North Texas area, or are you open to like limited partners, nationally and globally?
Globally, nationally, whatever the mix is. We're certainly looking to have investors from all across the board. I think one of the things that we've done pretty well with the people we work with is spend a little bit of time on the education so people are comfortable with what they're doing. I think that's one of the big things. Frankly, it's not all philanthropic effort. It's the more we educate people up front, the less questions we have to answer with the projects going along.
Right.
And it's really important for those people to be comfortable with what they're doing. But yeah, there's no need to be local to the area that they're investing in, or local here, or wherever the projects are. It's, the same example I would say is, I keep going back to the stock example, but how many stocks do you invest in that aren't based in your hometown?
Right.
There's a lot.
Well, that's a great analogy. Yeah.
Yeah. So it's
so people that want to work with you, how do they connect with you in your company?
So I'd say that the easiest way is on our website. You can catch me there. It's 𝐭𝐢𝐻capitalpartners.com, and then that's where you can get a hold of me. For people listening on here, I'm happy to provide my number as well, if that's kosher. So I can they can catch me. I'll give you straight my 682-268-1914. So you can reach me directly there. Any people that want to just give me a shout, I'm happy to just answer questions, guide people along, help people whatever they want. Whether they're looking for passive investments, or maybe they're looking for projects that are more in the space that I mentioned before that my wife does, with some single family homes and property management, and we can really help out with a lot of deals. We're here to help out in whatever sense that is.
Oh, that's wonderful, Mickey. Thank you. And we are going to have Mickey's contact information linked below, as well
Perfect.
as phone number and website. And
Yeah.
before we wrap up, I want to ask you the big question, which is, what do you predict for 2024? What are you seeing in your?
Oh man, predictions get yourself in trouble, right? But I'll it didn't work. It didn't work for me in the NCAA football playoffs, so I'll see if I do better with this one. So I think 2024 there's certainly going to be challenges, and I'm going to talk specifically to this multifamily space.
Mm-hmm.
My personal projection is that we don't see the big rate cuts that everyone's thinking, hey, we're going to get all of these rate cuts. I know it's an election year and all this kind of stuff, but I think what the market, there's so much money coming due, and especially in the multifamily space. I think it was Old Capital, or one of the groups was talking about somewhere in the range of like 24 billion in Texas alone of bridge debt and short-term lending, or money that's coming due in 24. And that's going to create this huge need for refinance and pressures for all these people that maybe underwrote these deals with a lot lower interest rate expectations. And now these projects aren't going to cash flow as much. So what I would project is you're going to see a lot of good deals towards the latter part of the year. I think that most of the people will be active and involved in trying to sell and working with people before you see a lot of great deals, because there's people trying to get out from underneath something. I think that the deals will probably get resolved before they get to that point. So I wouldn't expect you'd see this big crash in the market and then people recovering afterwards. So I think you'd see some people kind of buying on the way down that softens that a bit. But that's just my 2 cents. So
well, let's see. We're going to watch that Texas market now very closely.
Yeah, certainly. And I, just to come back, I should have just given my email as well on the website. For you, it's Mickey@𝐭𝐢𝐻capitalpartners.com. So people can reach me there. I should have provided that, but I just
we'll make sure to have all that in there for you.
It sounds great.
Awesome. Reggie, would you like to ask Mickey any other questions?
Oh, I think that's it. You were very clear and concise on what you're doing. And so we appreciate having you as a guest, and providing information about the North Texas market and what you forecast for multifamily.
Sounds good. I appreciate you guys having me on. Don't hold me to that forecast with everything, because
well, it's a forecast, right?
You guys will come back and say, "Yeah, you big dummy, you missed that one altogether."
Well, we're gonna do a 2025, God willing, recap with all our guests, and we're gonna be like, "You were right on," or "Wait, were you?"
That's right.
Off?
Hits and misses. Who got it right and who didn't?
Absolutely. Well, thank you guys for watching. Please make sure to like and subscribe, and we will share Mickey's contact information below. And until then, we will catch you next time.
All right, guys. Thank you.
Thank you.